Well, good morning, traders and investors. My name is Roger Scott, and I'm the senior strategist for Wealth Press. It's Friday. It's January 27th. Next week is February. Don't ask me where January has gone. I have no idea. I still feel like it's December, or actually I feel like it's October. It's 8:02 in the morning. The market's going to gear up to open in about an hour and 28 minutes. Wanted to give you a nice report early today because it's Friday. We went through a lot of earnings. So far, things are slightly better than expected. Things are not as bad. We're not seeing anything fall off the cliff, which is giving the market a little boost, which is very positive. We also had a good GDP report yesterday, and I want to talk about what the algos are doing right now. But we're opening down about 70 points on the NASDAQ, about 23 on the Dow. We've been really moving higher the last couple of days, so a little reprieve on the indices wouldn't be such a big deal. In terms of the bond market is in fact cooling off those levels. I wish I had sold it around 109, but I wanted to wait for it to hit the 200-day moving average. Maybe I'll get another opportunity. If not, we'll wait. But it looks like we're turning down, which would in fact put more pressure on the overall stock market. More importantly, technology, consumer, discretionary. Matter of fact, I wanted to show you something, and I'll get into the nitty-gritty in a minute. But because today's Friday, I wanted to talk about algos. And one of the things we're seeing algos doing is push momentum levels really, really high up and really down, which is why I look at these internals so much. So this is infotech, right? Look at where we're at with infotech. Yes, we could go a little bit higher. We can. I mean, we've gone higher 1, 2, 3, 4, 5, 6, 7 times in 7 years. So we have gone higher, but my point is, look at where these levels are right now. Look at where they're at. They're at very crucial levels. These are algos pushing the market higher and trying to bring liquidity and bring a bunch of buyers in right before they turn down. So it's very, very important to look at these levels, especially on the 50-day moving average, because a lot of the algos are dead set on pushing the market to overbought levels, especially one sector. They get honed in, or they laser focus on one sector, and they drive price and momentum up, and then they pull it out, like pulling the rug underneath. So right now, what I'm seeing the algos is doing is bringing momentum up in infotech. I'm also seeing the algos. I was about to say the alphas. I've been watching crime shows too much. Watching the alphas. No, the algos. The algo, consumer discretionary algos. Look at that. 1, 2, 3, 4, 5, 6, 7 times. So we are in a once in a year type of momentum levels on these major indices, and that's why I'm posting them. And you got to pay attention during these periods, because that's when the turning points occur. Now, before algos were mainstream, you would see levels go up to about 65, 75, but now they go extreme one way or another, and then they turn right when it goes to 91 or 92%, like you see right here. And the more algos we have, the more of this you will see, and the more of these levels you will see, these extremes. So consumer discretionary is really overbought. Infotech is really overbought. Look at consumer staples. It looks like it's coming off. So I haven't seen the bottom in consumer staples, assuming this isn't the bottom, but we've only seen price momentum go to these levels 1, 2, 3, 4 times in the last 7 years. So if we raise it a little bit and take it up to here, for example, where it is right now, we'll see 1, 2, 3, 4, 5, 6, 7 times. 7 times. It seems to be getting 7 out of 7. So it seems like the momentum levels we're seeing right now are really, really high in some indices and really, really low in some indices. And as I go through the different sectors in a bit, keep your eye on consumer staples, infotech, and consumer discretionary, because those three seem to be near their turning points. Now let's talk about a global economy and what to expect. But I wanted to give you a little algo corner to see what these algos are doing. And if you want to track these, just go to stocks, go to market performance right here. And here's the link that you want to switch. The only other thing is when you click this, it may look a little weird. So you want to take the type of chart and you want to make it into an area chart. I know a lot of people ask me, how do you get this view? So you just put an area chart. That's all. Real simple. and it's right here, the third ticker symbol on bar chart. I'm using bar chart because everybody has access to bar chart. Everybody uses a different broker, but everybody has access to bar chart. So I figure if I could show you this on bar chart, you can then apply it to your own platform. And yes, every trading platform has the number of stocks trading above the 50-day line and so forth, so forth. This isn't like some voodoo indicator or anything like that. So let's talk a little bit about global economy. Three major benchmarks, indices, the Dow, the S&P, and the QQQ, closed higher on Thursday, better than expected U.S. growth, overshadowed mixed earnings. Earnings are okay, but we're having the lowest amount of earnings outperform expectations this year in the last 7-8 years. So it's not that great either. And remember, they've all been beaten down to death. Gains were fueled by energy, which is on its way to make new highs. Again, I hate to say I told you so, but I did. Look at energies. All-time highs, baby. We're almost there. Sorry, I'm getting excited about energies. Technology. We talked about technology and how overbought it is, and consumer goods. We talked about consumer staples and consumer discretionary a few minutes ago. So you see exactly where they're at. S&P and NASDAQ posted a 6-week high, which is coincidence with the algos rushing the market higher. Dow dodged a 1-week high. Remember I said the Dow is going to lag behind? It's not as strong. Led by gains in tech after Tesla reported record quarterly revenue and topping EPS. Don't hold your breath. They're still below the 200-day moving average, and I'm becoming increasingly bearish on them. Shares of Intel plunged 9% pre-market. That used to be, that was like Apple 20 years ago, remember? Chip maker reported fourth quarter results that fell short of expectation and gave weaker than expected guidance. Intel is a big company. If they're having weaker than expected guidance, that's not happiness, all right? On the economic front, Commerce Department reported the U.S. economy grew at 2.9%, stronger than 2.6%. That's a very, very positive sign. And the labor market is very strong. Look, I don't care what the number is, 200,000, 225,000, 186,000. It's really low. Anything around 200,000 right now is super, super low. Don't get nitpicky on the exact number because it doesn't really make any difference. It's really good right now. Fourth quarter earnings are rolling and rolling and rolling. Chevron, American Express, CHTR, Charter, one of the weakest stocks in the last 2 years that we've been giving short recommendations on. Analysts expect the earnings to be now 2.7% versus 1.6% start of the year. I think the expectation yesterday was 3.1%. So it's going lower, but it's kind of sticking at that range. Hopefully this won't go to 4 or 5%. Today we're going to be focused on PCE, the Consumer Expenditure Index. That's coming out at about 8:30, I believe. Also, the index we're looking at up 3.3% month over month and 4.4% year over year. In December, we were looking at 4.7%. We're also looking at pending home sales. I'm not looking for the number to be positive. New figures to be 0.9% month over month. That sounds about right. I think home sales are going to continue moving down. We've got the Michigan Consumer Sentiment Index. We're looking at a figure of 64.6, and the Expectation Index, which is supposed to rise to 62 versus 59. In the Japanese market, the Nikkei market, I want some sushi. I think I'm going to have some sushi tonight. It closed higher after data revealed that inflation rose more than anticipated, heralding a similar trend in nationwide CPI inflation. I don't know why that caused the country to close higher. Today, we've got to look at Visa. They reported better than expected earnings. LHX climbed 5% better than expected earnings. General Mills, this may give consumer staples a much-needed boost, rose 1% after UBS upgraded the stock to buy from neutral. I like that and gave it a target of 88. I think we're long GIS right now. Hasbro slid 5%. They've been really circling the drain, and they're cutting jobs, 1,000 jobs. Not very, very, very good. As I mentioned, energies are looking great. I've been talking about energies looking really good for quite some time. Basic materials is looking good. Financials is looking good. Industrial is looking good. Communication, I would be very, very, very careful about. Let me show you why. Look at the communication service sector. Infotech, look. See that? Infotech. How about communication? Let's see if communication is, that's Infotech actually. No, communication services. Here it is. I knew I was in the wrong one. Look at this. You got to see this for yourself. You really do have to see this for yourself. Look at this. 88 versus 52. Barely above the 50-day moving average, while 88. That's a sector that's grossly overbought. Matter of fact, you know how I was talking about technology and consumer staples? Telecom, 1, 2, 3, 4, 5, 6, 7. And look at where we're at. So I'm very, 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 very nervous about communications, consumer discretionary, and technology because the algos have been running them up like madmen. Sure, we can go up another couple of days, but I mean, we're in very, very dangerous, very, very dangerous levels right now. And I mean very dangerous levels with communication services. Let's look at all of these sectors again. So let me just go here. All 11 sectors. So energy's looking good, materials looking good, financials is looking good, industrial's looking good, communication and technology are not looking good per our discussion right here on algos. Consumer staples is starting to look good again. I like healthcare. Let's look at the charts. Energy's breaking out almost at all-time highs. Basic materials is looking beautiful right here. Financials are looking great. I like that. Industrial is kind of backing away a little bit, but still near the highs. Not really all that bad. Real estate is looking good. Be careful with real estate right now. Consumer discretionary, I already told you that I'm expecting it to cool off. Technology, I'm expecting this resistance to hold and it to cool off. And communication services, I'm expecting this thing to cool off. Healthcare is still kind of trending down. I think we're going to see a good catalyst. Give it a little time. And consumer staples may be close to bottoming out. Utilities are starting to come up again. I think we're going to see in consumer staples and healthcare what you're seeing in utilities right now. Next week, we're going to have a bigger week of earnings than this week. Let me give you key levels for the SPY and all the other indices so you have something to work with going into the weekend. All right. So notice we're approaching this overbought level. I think the SPY is going to get stuck around here, and I don't think it's going to break through. I think we're going to come back down and kiss the 200-day moving average. I don't think we're ready to break out. I think this is the market doing everything possible to sucker us in. And I mean everything humanly possible to sucker us in. If you look at QQQ, it's even worse. And remember, QQQ has the communication, tech, and consumer discretionary. Look at where it is right now. And look at where the RSI right now is. Let me switch it to a 5-day RSI. 5-day, let's go to 20. I got to remind my assistant to change this for me. I've been looking at the 5 more because of earnings, a little more dynamic. Look at that. The divergence we're seeing is crazy. So I would be very, very, very cautious with technology right now. Very, very, very cautious with technology, communication services, and consumer discretionary. And I mean really, really careful. Now, before I let you go, I've got something really exciting for you. It's Friday. Not just Friday, and it's freezing here too. While some traders never consider trading over the weekends, that's when Lance Ippolito sees some of his absolute best returns. And we're not saying this lightly. Using this weekend strategy, Lance has been crushing it with a total annualized return of 625%, and he's only holding through the weekend. I love this strategy. I'm jealous. I wish I came up with it. He's holding a special live presentation at 10 a.m. Eastern Time today on Friday, and he's going to reveal how it works, and he's going to give you 3 trades that his system is signaling right now. This is a presentation you don't want to miss. I'm going to be there. I'm going to write down these ticker symbols, especially as we head into another weekend. And earnings are in full bloom. Click the link below. And if you don't know where this link is, it's in the YouTube Wealth Press channel. Go to YouTube, go to Wealth Press. You'll find it below this video. It's the latest video. And 10 a.m. Eastern Time, Friday, today. Don't miss out. He's going to give you 3 plays for the weekend. This thing gave him a 625% total annualized return. You don't want to miss out. Follow the link. And if you have comments, questions, feedback, I don't care. I've seen it all. Just post comment in the YouTube video and I will respond. Send me emails if you have questions to support@marketgeeks.com. Have a great, great weekend. And don't miss out. 10 a.m. with Lance Eastern Time today. This is going to be big. Follow the link below. Bye. Have a great weekend, guys.